Hey guys, we will be starting shortly. Have a good guest coming today. It'll be interesting. I'll say that much. It'll have a pretty interesting, part controversial topics about entrepreneurship, investors, what's going on there, how to deal with your business, your best response. It'll be an interesting one today. Just stay tuned. We'll start in a minute or so.
All right, there we go. There he
Hey,
is.
hey.
It is Raj. Okay. What's going on, guys? 4 Pacific on the dot, 7 Eastern, a lot later than 7 Eastern in parts of Europe that are being represented and otherwise. Today's conversation is going to be a different one. You know, on Tuesdays, we're talking about politics and business and what the F you should do as an entrepreneur or business owner in vis-a-vis politics. Today, we have Raj on, and Raj Jhaveri is entrepreneur, technologist, turned investor as well. And he has, really good perspective from the not just the entrepreneurship side, but from the investor side of things in terms of what the heck are investors doing right now, and not just individual investors or angel investors, but then also VCs, what's going on in that world right now. And collectively, him and I will then talk about if you're an entrepreneur, if you have your own business, what should you be doing currently? What's your best response? How should you be planning your business? What adjustments should you make? And then equally somehow in this thing, projecting what the heck we think is going to happen in the near term and being able to react to that as well. So that's the agenda for today. That's what we're going to be talking about. So let's start it off this way. So Raj, the big question that many entrepreneurs have, right, is what is happening in the investment world right now? Are people investing? Are angels investing? Are VCs investing? What are you seeing right now specifically? And then also maybe if you want to, I tried to introduce you. It was an okay job of that. If you want to give a bit of color on that too. It wasn't the greatest. But what's going on right now in that world, and a bit about yourself would be cool too.
No, no, most definitely. As Athan just said, I've known Athan for quite some time. So my career, I've started off as, an entrepreneur, mainly on the technologist side. I've co-founded companies, hired CEOs to run my companies, because I like to be on the building side. But then, as time grew, I've learned to, invest in other ideas and other companies that I really believe in, and I had some good success as well. So, I've had a chance from my network and from networking to investing on certain unicorns that have IPO'd recently, and companies like Chewy.com, Zoom is one of them I've invested in. I've invested in Fiverr,
I've heard of that
Pinterest.
company right now. People have heard of that
Yeah.
company. Yeah.
I've done some, pretty good smart investing. I've been very lucky on certain aspects, and I've had some losses on too, some certain bad investment, and that's usually not because of the platform, but there's other factors that come into play that we'll probably discuss later on, like, looking at leadership, what, things that VCs look into now more carefully. But yeah, especially during this time, during this COVID-19 crisis time, one of the biggest questions, like you said, was, what are VCs doing? What are angel investors doing? And so I'll start off with like, what are angel investors doing from this perspective, especially if you're, an early stage startup, or, a startup that has some product that's going on. And I'm going to be very honest is that, because of the economic uncertainty of what's going on, especially for angel investors, they're usually high net worth people, and what they've been doing is, during that market crash that happened not so long ago, all investment has been held to a pause, because of the uncertainty. And so from the angel investment perspective, they're now just reevaluating on, two components. And then VCs are looking at this as well too in certain components. But like, if they're an existing portfolio company that they have or they've already invested in, they're more concentrated on their existing portfolio to make sure they're surviving during this crisis. And so, making sure they're looking at their runway, what their burn rate is, and kind of reducing that. And then also, so basically there's a defensive side to this, and then there's an offensive side to it that I can, talk about later. And then, so angels are kind of more concentrated on their existing portfolios, making sure they survive. If they a good chunk of them have invested into the stock market as well, so those, they're doing hold positions too. But there is a small window of opportunity if you jump on it early enough, is that because of the economic market uncertainty, there's a lot of angels that have cashed out. So now they have cash laying around coming from the market, that what to do next, right? So some have reinvested in when some of these great companies have kind of plateaued at their bottom, and then they're as you can see in the market, it's been on the rise again. For now, we don't know. Once again, it's still uncertainty, but then you'll have that type of component. But if you're smart enough, if you can attract or get that angel investor's attention, they may pivot to start investing into mid-stage startups. Seed rounds are very hard to do during this time, but if you already have cash flow coming into your company, they'll kind of look into you and take you seriously regarding to that. From a VC perspective, so they're super focused on their portfolio companies and making sure that their mental health and they have someone to lean on. They're looking at the runway. So, some of you guys are aware, they're seeing if layoffs are necessary. They're reducing expenses and they're doing cash preservation. So they're pausing any third-party contracts, subscriptions that are necessary, trying to reduce overhead. They're putting, pauses on their marketing, not attending conferences or events, or they're removing travel. And then they're also looking to see if they're really in a crisis, they're doing insider rounds. So they're doing smaller rounds to make sure they could stay afloat, and that's where the money's going towards. So that's on the defensive side. From an offensive side, and this should be an interesting conversation to have with Athan, is that during this time of crisis, how do you become offensive, and how do you take advantage of it? And there are certain companies like Chewy that is public, but if you're like, a retail-based or delivery-based or a grocery-based company, subscription-based company that takes your consumer goods to the customer, they're taking advantage of the situation.
By the way, when Raj says offensive, he does not mean like, cursing
on the
and
offense.
Putting that in your copy.
Yeah.
He means on the offense, to be really crystal clear, to be
Yeah.
honest with you.
Yeah. So how do you go on the offense instead of being on the defense? And which are majority of the companies are doing, they're playing the, the defense route. But how do you go on offense? And there you can get creative, right? So things that you've been putting on the back burner that are important, either like, if you're a software company or a SaaS company, looking at your security, your audit security, like things that you really don't focus on. Other components are, if you are a company that could take advantage of marketing, then this is a good time to do it as well. If you're a delivery subscription component, and if you're trying to figure out what your marketing strategy is, you can do a lot of A/B testing since a lot of people are at home right now. So those are things that you can refocus your energy on if your product development's been on the slow, or sales has been at a pause as well. Is how do you refocus your energy and concentrate on certain components? And then from a VC perspective, they are getting creative. So what they're doing is they're doing CEO and founder roundtables if they are very similar in industries, and basically they're doing chats together on figuring out how they can, different solutions on how to stay afloat, and then also how they can support each other and someone to lean on. So, if you are a startup that's well established, this is a good time to reach out to other CEOs that are in the same boat as you and share ideas and come up with any type of collaboration ideas, especially from a marketing perspective. This is a good time to kind of reamp your marketing and work on partnerships without spending a dime. So this is a good time to kind of explore those creative routes of how do you promote your company.
I mean, so that's all like awesome stuff, man. And thank you for sharing all that stuff. And building on top of what he's saying, you know, when on earth do you ever have 400 million people in the US alone, let alone elsewhere, captive with zero time to do anything but pay attention and watch your media, right? Like, or whatever you're putting out in articles, blog posts, whatever the heck it is. Like, when on earth do you have the time to be able to, this is like the most optimal of optimal times to have a captive audience and be able to get your message across and do that in a creative way too. But I think building on top of what you were saying, Raj, I think like step number one to me to some extent is, depending upon your business, is categorizing your business and figuring out where it falls. Like, are you in that magic 10% that like just happens to correlate really strongly with what people need right now? Like, are you selling hand sanitizer, at-home fitness products? Are you Zoom, et cetera, et cetera? In which case you could just blast it, right, and turn on the hose. Are you in the next category, which is diversified and you're somewhat protected, you're not in the worst shape ever, and you're somewhere in between? Or are you in this category here where there's no excellent angle that exists right now other than a strong pivot to be able to monetize your business and change your business model to some extent? However, you could do a lot of creative things to be able to build up brand equity and capture share of mind for people, because we all know, yes, okay, the world might not be identical to what it was before. It's certainly going to shift in some way, but we're going to come out of this at some point. I mean, you see some states, you know, my own anecdote aside, of some stupid states that are actually breaking out of this a little bit early. But you see variants of states that are breaking out of it, countries breaking out of it to actually get back into normal flow. And people are going to go back to that. So you're going to get to position your brand and build up brand equity so that people have you top of mind by the time they shift out of this. And you will be the brand to be able to capture that. And so, like, what kinds of things you could do that may not be profitable in the immediate term, but might generate a lot of value for you in brand equity? Hotels that are housing frontline staff, for instance, they're not going to sell those hotel rooms. Nominal variable cost to be able to actually run the hotel and make sure these people are okay. Tons of brand equity they pick up. And oh yeah, by the way, they're doing something awesome as well, right? I mean, no brainer that exists. And that's just an example. There's plenty of other examples of dynamic video, you know, videos and content that you can produce. You've seen hotels and other famous places sharing recipes and creating dynamic video around how to produce recipes at home so they can still stay attached to consumers, so that when they break out, they're top of mind. Like, there's all these excellent things you could be doing for brand equity at this point.
Yeah, no, I absolutely agree. And I think the first thing is that depending on, you know, who your target market is and what your product is or what your company is, it's basically asking yourself, like, what are the current needs right now during, you know, this time of crisis, and then how you can be creative to kind of cater even the smallest amount of need. And a perfect example I'll tell you is telemedicine, to be honest. No one knew from a consumer perspective what the hell telemedicine was. And it was a struggling industry that was very innovative, but you know, it was really hard because there was, you know, insurance reimbursement issues, and just marketing issues of like being related to it.
All right,
but now
you know telemedicine really well here. Let me tell you my vantage point of it, where I don't know it nearly as well as you. My vantage point was, it was a toss-in benefit that people had access to by virtue of the insurance that they had from their companies or otherwise, and it was barely used because people didn't view it as good as good of a product. People also kind of knew that insurance companies were trying to migrate people to telehealth because it's more cost effective potentially for the insurance company, plus or minus. And people didn't use it. It was just underutilized is what it was, right?
It was underutilized, but it was also education, right? Like, if you go to a random lay person, like, they don't know what telemedicine is, and they don't know what the reimbursement is, or like the fact that how much cost of like, you know, how much savings it is, especially for those who don't have insurance. Like, there's certain things that you can do via telemedicine instead of rushing to the ER, right? So like, I'll give you one company, like DocCcalm. Even though like I have bashed on them in terms of their tech itself, but they did a wonderful job at marketing and taking advantage of this crisis, of using a platform. I think this company was 6 years, 7 years old, never took off, etc. And what they ended up doing was that they did something creative, and they're like, hey, everyone could use telemedicine for free, very basic. You have a video plugin, it's HIPAA compliant, it's encrypted. your doctor could now talk to you through this platform and it's free, right? And from based on that, and I'll get to how they started generating revenue. It was a lot of bait and switches that were going on, but basically, promoting that they're a free platform, not knowing the quality of that free platform is going to be. They started getting user acquisition for like 2,500 users per hour. It was very
practically zero
crazy.
variable cost as well, right? Like there's
Zero variable cost.
Server,
They just
nothing.
it was basically word of mouth that happened. Yeah. They blasted it off on a Facebook group of physicians, COVID physicians, and then one physician after another. It was just straight, organic growth from that point, and it was all word of mouth. And how they're generating revenue is they're basically converting these users to long-time subscription users, right. And that's how they're generating revenue because by paying $10 more, you're getting higher quality video and more, opportunity and branding of that video chat. So, I mean, this is a good example of how they took the crisis and flipped it and how to take advantage of it from a user acquisition perspective and a marketing perspective. So I think startups can get creative and figure out what the current needs are from the consumer perspective, or, if you're a business and you have a SaaS platform, what are those business needs going to them? And if your sales is being at a pause, then how do you refocus? And that's something that, a lot of companies are doing. They're joining forces or talking to each other on how they can collaborate. So this is a good time to kind of lean on each other.
Yeah, I agree with you. And so like from the entrepreneur standpoint, right? Like it's certainly this element of control. You can control opportunity to be able to reinvent business plans or adjust and re-strategize, potentially create a new ancillary revenue stream that could exist or a new line of business that could diversify for the future or maybe the future of your business in some capacity. But for those who are out there who are like in tweener land, like I've seen companies come to me and these are, strong companies that exist, right? They have a good concept or, a good approach. They're generating some movement, right? But they're actually out potentially looking for funding, right? And the thing that seems to sometimes be missing to me is that like there is this element of like figuring out where you stack and what's on the investors, VCs' minds, et cetera, right? Like number one, as you said, like VCs are protecting their portfolio companies first and foremost. That stands to reason. Number two, investors are humans as well, right? So they're also stuck at home. And they're also trying to spend the extra time with their family to some extent, let alone the fact that there's uncertainty around different scenarios, let alone the fact that they're probably also starting to think about from a strategic standpoint with their portfolio, do they have to make any adjustments, overarching adjustments, because the future of the world is going to shift as well, right? And the thing that I'm seeing is for some of these entrepreneurs, like, yeah, really good, really solid, business idea that existed in the pre-COVID world, and still in some cases, still very good ideas, right? But they are no longer at the top of the hierarchy anymore. The hierarchy anymore, because the hierarchy shows they're hyper-relevant businesses that are relevant to COVID and the post-COVID world specifically, and not so much what that world looked like before. And so I guess that's the question is like, what's the move for these people? If you have like one of these tweener businesses, right? These tweener like pretty good businesses, but it's you're not in the future of digital fitness because that's where the fitness movement is now moving as a result of this big shock to the system. So you're not in the top 5-10% percentile, I would say. You're in the next 20 or 30 or something like that. Relevant business, not quite that. What's to do at that point? Is it recognize that and maybe adjust the model so it does become more relevant because you are competing against the most interesting opportunities that exist out there. And if your genuine pathway is to raise capital, you need to adjust your model to make it relevant enough to do that. Do you stay course and assume things are going to revert back? Like there's several scenarios that exist out there, like so many of them.
I think it's case by case, right? And this is really interesting because you're hitting points on like what should post-COVID should look like, and then what happens if another COVID happens, right?
Yeah, and by the way, we see your question. We'll answer your question afterwards, as soon as Raj is up.
Yeah, no, for sure. Let's see, do you have a good? Yeah. All right. Yeah. Ethan, are you? I guess you could scroll up and look at these questions.
I see the gist of the question though. Is how to collaborate and a fruitful collaboration.
Yeah, no, for sure. So going back to like post-COVID and preparing for the next COVID and doing that. And it kind of resonated. If you guys haven't read it, it was a manifesto, kind of an article written by Mark Andreessen. Andreessen, well, they're one of the major VC firms out there, and it's basically called, it's time to build. And if you haven't read it, read it. It's definitely worth it, and it definitely motivates you and makes you think on like, all right, where this I guess where the world is headed towards, and how do you build to prepare for that world. And we know that we're in a technological revolution. It's a new industrial revolution, and we're calling it technological revolution. Things are now switching to AI, drones, logistics. So the hot topics right now that even post-COVID word, that the world is like what people are now really interested to from an investor perspective is basically logistics, delivery systems. So that's really important. AI is still huge. Robotics is another thing that's really huge. And digitizing healthcare. It's another industry that's really being focused on. I think there's a few other items that are there, but it's basically preparing yourself on this whole digital revolution that we're going through right now. And basically you have to ask your question on, whatever my startup is or whatever my business is, how am I prepared to be part of that digital revolution, right? So if you are, how do you digitize yourself?
Yeah.
And that's a question that you need to ask yourself. And then if you can answer that yourself successfully, then build on top of that on like, how do you plan to build it, promote it, market it, etc., who your end users are, and how do you get them to start using it. And then that would kind of redirect, either your company to kind of prepare for post-COVID.
All right, let's talk about milk for a second then, okay? Yes, milk, like the drink milk, okay? Because this is going to tie into what you're saying and then tie into the question that was asked, okay? If you see that the world is shifting, right, and that it's moving to a more technological place, in some industries, historically, we're not built to be able to solve for that, right? And there's innovation that's needed and many whiteboard sessions, brainstorming, et cetera, that's needed. You're essentially going to have to reinvent your industry and remarket your industry on a collective basis, have anybody give a shit about it so that they can actually respond to you and utilize your products, your services, et cetera, right? And so I come back to milk. It's the natural connection that I drew in my mind, which is it was not a milk company that was originally pushing out the value of milk, right? It was milk as a brand, as a product in general that was being pushed up, that then, from a consolidated standpoint, pushed up the awareness of that. And then obviously the brands benefited from that as well. And so I think there's like a parallel that exists, for the question that was asked about a fruitful collaboration that coincides with Raj's comment, right? Which is, if you're having to reinvent your business, there's likely others that are having to reinvent their business as well in your same industry because they're experiencing the exact same thing as well. And you may not know the answer. And, maybe you have part of the answer. Maybe they have part of the answer as well. It seems like a really excellent way to be able to sit down, set up a Zoom meeting, and have that kind of collaborative whiteboard session and figure out a couple things. One, what are the best practices or thoughts that we have for being able to reinvent our business? Two, what are ways that we can generate awareness, things that were already historically done, like brand collaborations and kind of cross-marketing and things like that, to be able to generate awareness for the different parties, keep your name relevant, especially in those industries that are not as relevant right now. So I come back to milk. Milk's the one thing that like struck me as I thought about like building or rebuilding up an industry so that people give a shit about it at the end of the day and then can buy from all the brands underneath. I don't know. That's what dawned on me. Maybe you have a better example of one than that.
So a fruitful collaboration, I guess, going directly to the question is, there's a few questions you kind of ask yourself, right? The company that you're approaching or the person you're approaching in order to collaborate with, you need to really understand like, hey, how can you benefit from them? Is it their end customers? Is it their technology? Is it the product? Like, what's beneficial to you in order to take yourself to the next level? But then you also have to, obviously it's a collaboration, right? So what can you provide them to, that would benefit them, and you have to pitch that to them in order to actual collaboration. And also the best way is like, just making sure that like you guys are within the same industry, right? So it's not about like, hey, I am, let's take milk for an example, right? And we'll take milk. So I produce milk. I have, I manufacture milk, or I have farms, etc., right? Like, it's very basic of being in grocery stores or etc. Now, like, I'm not gonna search for a collaboration, be like, hey, Amazon, be our like exclusive, purchase our milk and put it in Whole Foods and deliver it, etc. No, that's not fruitful for them, right? So you need to understand like, who could benefit from you. And it could be someone who's a company that is like changing how milk is, how we drink it, or flavors, or if it's energy related, if it's a sports drink, or if it's protein, or how do you benefit each other, and then remarket a different version of your milk in that case. And yeah, and there are companies that that were taking advantage, that I guess part of this, not part of the technological revolution, but they're part of like certain trends, and veganism is like one of the biggest trends out there. And Beyond Meat did well, and Impossible Foods doing well and getting themselves out there. But their approach was not just like, hey, we're a good tasting product, or being vegan, protect the animals, etc. No, their approach was like, how do we reduce like greenhouse emissions? And they kind of involved technology in a way on like, overall our infrastructure and operations and manufacturers has reduced our carbon footprint by this amount. So they, even though their product is not really technology related, but they somehow got technology involved into it in order to promote the market. So it's about thinking from different verticals and how to do that.
Yeah, that makes sense. I mean, I think the other thing that exists is, I've talked about it like a little bit, as it relates to technology, but we've already seen, like, prior to this happening, right? Prior to the whole COVID experience, let's call it, right? There's already been this like historical globalization that already shifted a little bit away from that. There was the China trade issues that existed, et cetera, right? As we become a little bit more localized as well, all of a sudden we have to manage cost of goods and making sure that margins are sustainable for businesses to operate. Just quite bluntly, American labor, to be able to produce that, is not going to be able to compete with some international labor that exists, which means cost of goods is not going to be the same, which means where the heck are we going? We're going to technology. We're going to automated processes and robots and things like that. It's a pretty good time to be able to, figure that out for your own business, because it's not just going to be, something good and a good brand message, right? But then also better for your margins potentially. And oh yeah, by the way, I mean, think about the world that's about to go out there right now, right? Like, we're going to come back, and people are always going to have a need for restaurants. People like going to restaurants and eating out and having it be social. They may especially miss it in this case. However, they're probably going to have an extra aversion to germs and the possibility of getting diseases and things like that. Like, think about the need that's going to exist for some kind of robotic or automated cleaning services that exist in these restaurants, right? Where humans aren't going to want to touch it. Plus, we have to mobilize it ourselves, as an example. And that's just, it's a quick example that exists. But like the point of the fact of the matter is like, with globalization a little bit getting tilted off its axis right now a little bit, and things becoming a little bit more inward within the U.S. to some extent. This is like a forcing mechanism to have to focus on technology and scalable things. And that's the whole premise behind why technology even became a thing, right? Technology, you invest in I'll give the extreme version because it's not limited to this. You invest in one robot, okay? Robots don't get sick, by the way. And over time, you'll recoup the investment of the robot, is what it is, right? And I'm not suggesting you can't control it or not control it. That's where shit was going anyway to begin with. In some capacity. It doesn't mean there won't be other jobs and new things to do. It's just for things that we can automate, we're going to automate them. So you have to figure out how your business fits in with that, and how to mobilize that, how to tell the brand message around it. There's a positive brand message that could exist, and how it can impact your margins 100% too, and really help you there as well.
Yeah, no, it's and I've never invested in a restaurant, or it's definitely not my world. It's not in that technology world, but I could tell you like very smart ideas I've seen from restaurants here locally, and I've seen them even busier than they were before. And that's basically, they utilize existing technology of like Grubhub, Seamless, and all the delivery systems that that are out there, and then they're doing like unique ways of curbside pickup as well. So and in order to do that, basically they're it's been unfortunate, they don't have they're either letting go their waiters, waitress, etc. But if you're smart enough to repurpose them, to put them in more of this whole operations of during COVID time of cooking, having a limited menu, maybe like forming a limited menu, kind of putting more digital ads out there or promotions out there for Grubhub, et cetera, and trying to basically tack into their reoccurring customers somehow. If they have that data, it's the best time to do it in order to promote yourself digitally and really get yourself out there, so that when post-COVID happens, people have had your food in certain ways, and they would love to have the full experience being in that restaurant. So it's a shame that certain restaurants are closing off, especially the small hole in the walls. But if you have there's this Mexican restaurant here called Rodrigo's, and I was calling in, and they were busy. They had just crap loads of orders, and they're not doing a full menu. They're doing a very limited menu too. Yet they were still backlogged of just orders and trying to get on top of it. So you could still churn out revenue during this time. It probably won't be as much as having that dine-in experience, but it's basically, how do you use technology to even in restaurants, and how do you stay afloat in times like this. So
yeah, and I mean, you're if you're a business owner, you're uncomfortably being primed for how the world may shift afterwards, right? So this was kind of to some extent, I don't want to say inevitable, but inevitable given this circumstance. So your job, regardless of when it was, is you're going to have to mobilize and make sure that your product, your service, is suited for the quote unquote new world that we keep talking about. And oh yeah, by the way, what you have sitting there, talking about customer databases, right? Oh yeah, by the way, what you have sitting there, to the extent that you tap it, is you have a focus group that's waiting there for you potentially, who can give you feedback on what their new needs are at this point, who have a vested interest in making sure that your business stays right.
Salmon sandwich that I go to.
So if they said to me, what is it you need right now? Like, what products do you want? What's missing right now? I'd run and I'd be the first person to tell them what's going on. Like, I want to make sure their business is protected. We all have that vested interest. You have a focus group right there, focus group waiting right there to be able to tap.
Yeah, absolutely. And I look at companies that don't have the opportunity to obtain data. This is a good time to obtain data. People are sitting at home. You could survey them. You could get whatever data you need, and start building that infrastructure and operations, so that when reopening comes in, you have a full-fledged new vertical of generating revenue. So I mean, it's definitely a good time to obtain data, especially if that's not been your focus before. So and that's one thing.
It doesn't
What
need
else?
to be complex either, by the way, right? Like, when we say data, like, data is a word that could be intimidating for some people, right? Like, just go poll them, like see
Go
what it is
poll
they
them.
want and hear it.
Yeah.
There's nothing else to it.
And a lot of customers, or a lot of restaurants or fast food or a lot of places, I mean, they have point of sale system, or like they're using Square or some kind of credit card application that you are collecting customer data. You have their email addresses, they need receipts, etc. So you're collecting this data anyways, and it's a good chance to like just doing some kind of NPS survey to them, like how do you think what we're doing, how can we improve on, like something very basic. Re-polling your menu, reevaluating your menu. What are certain menu items that are not purchased as much? How do I make it better so people start purchasing it, right? So, it's a good time of reevaluation on, your cash spending and how to increase profits in certain ways. And it's a good time to do it, especially if you're not running a business, or if it's on hold, or you're closed right now. It's like, once again, I think people are concentrating so much on how to stay afloat and be defensive in a way. But it's about like, how do you take advantage of this, and how do you grow your business, and how do you go on the offense? It's something that people need to start doing.
I think the only way that, like, look, this isn't like the most comfortable thing for most business owners, most people, et cetera. But I think the only way you like really lose coming out of this is if you just stay put and treat it as if nothing is going to change, has changed, et cetera. I think that's the only way you lose out of this thing. If you evolve in some way and study and figure out how we should adjust, even if it's small things, let alone bigger things, you're going to come out stronger, better, more diversified on your revenue streams, et cetera. Like, you're going to come out stronger from this thing. If you sit tight that's where the mistake I think is going to be made, right? Like you're literally being hand-fed the fact that people's interests and needs are changing right now. You can't help but miss it. It's impossible to miss this right now, right? And even if you thought theoretically that the world was going to go back to normal, let's just say you thought it was going to go completely back to normal. Okay, like give me a timeline for that. When is it going to go back to completely normal between us not having enough testing, conceivably enough an actual vaccine, getting people's PTSD out, actually being able to remobilize industries and seeing what's still actually left and what's the like when is that going to be? 2 years, a year and a half? Like
Uh,
you're going to wait 2 years for things to go back to normal?
no, no, absolutely, right. So if you're a company and or a business and you're like waiting for the time of reopening and trying to figure out when you can reopen, don't bank on that. I think you're wasting valuable time at the moment, right? And like Ethan just said, you really can't predict that. You don't know if there's going to be a second spike. That's what happened in Hong Kong. You let your guard down, and then there was a second spike. And honestly, to really flatten this curve, with things going around and things reopening again, I really predict that we're going to see another spike that's going to be worse than the first wave, and things are going to close down again. I mean, the data and the metrics and from the past disease outbreaks that are out there shows exactly that. Once you put when you start removing preventable measures, there's been a second spike every single time. So in this case, it's not going to be any different. So I wouldn't bank on the time, at that short period of time of like, we'll be open again, but I guarantee you're going to end up being closed off again when the second spike happens. So right now is the best time to, how do I generate revenue from a second vertical using technology, and how to prepare for that. So this way, you're not really fighting against time, you're building something new. And then once you're allowed to reopen again, you have a second structure in place that's good, more gravy coming in, right? And I think that's the best advice I can do. And so now I know that we kind of I want to bring back the VC stuff, and I know there's other questions. Are VCs investing right now in general? And then another thing I've noticed during this time is that companies that are VC backed are getting a lot of heat for accepting PPP, and that's being frowned upon. And my advice, for those companies applying to PPP or that are venture backed, listen to your investors, listen to your board, listen to the VC. And from a VC perspective, we are really evaluating it case by case. Those companies that are really struggling, and especially if they're a servicing company, or like, let's say if you're a nail salon, or something that requires people to be there, right? And if you can't get creative, then yeah, we're going to suggest you to do PPP or try to do insider round to help you guys to stay afloat. So yeah, I think it's a case by case basis. Most VCs, if they really believe that PPP is not necessary, they'll need like a minimal amount of a round, then VCs are investing in those companies. So yeah, I highly recommend to take advantage of PPP, even if it's frowned upon. If you're a VC backed company, that doesn't necessarily mean anything. And then going to the topic, are VCs investing right now at the moment? And it's a yes or no type of thing. So VCs, each quarter there is a goal that they have to invest in a certain number of companies per goal, because there's a new influx of money that comes in every year to increase the fund. So they do have goals that they have to achieve in order to have a proper carry going back to the fund. So VCs are investing, and they're investing post concentrating on their portfolio. So their first priority is concentrating on the portfolio. Once their portfolio companies are happy and settled and taken care of, then they're looking, revisiting, all right, what companies can we invest in? And the good thing right now is that most investors, most venture capitalists, they're always traveling, right? And they get hundreds of pitch decks and hundreds of emails that they receive. So they don't read all of them. And they usually skim through it really quickly, and to determine if they want to respond or not. Now, since travel is like restricted and people are at home, I've noticed that the VCs have a lot of time. So this is a good time to approach investors and kind of, promote your company in the right way. And then I'll go over the do's and don'ts of what you shouldn't do and what you should do. So VCs do have time to look at decks and reevaluating, but I guess the approach right now is whoever you're approaching for money, make sure they have a track record in the specific industry that you're in, that they've invested in, right? So if investor is predominantly investing in SaaS platforms and you're out there creating the next vegan meat, don't expect them to invest in you, right? So be smart on who you're approaching, right? This way you build, it's beneficial for you to get that feedback. The second is don't approach them, and I get this a lot on LinkedIn, of expecting them to give you money and be like, hey, we're closing a round, here's the deck, are you interested? That's the worst approach you can do. No investor, no VC will give you money within 30 days. That's the rule of thumb. They're going to do their due diligence. They want to meet you. They want to screen you. They want to look at your books. There's a lot to it before they write out a big check to you. So don't take the approach like, hey, I have the startup, here's my deck, will you want to invest? We won't respond to that.
It's easy to think that you want to do that, right? Because when you're a startup and you're under the gun and you have either under the gun from like a financial pressure standpoint, or if you have all these aspirations to be able to grow and the capital is what you deem to be your mechanism to be able to do that, right? You just want to land it, right? You just want to get in, get it done, so it's really easy to take on an approach like that where you're like, hey, here's our thing, are you interested? We're closing the round out and that's that, right? It doesn't help also, right, that like you see God knows how many podcasts and things like that that talk about all the tactics that exist, like some of which may be actually relevant, right? Like humans are humans and there's no way around that. But like nonetheless, when you see that stuff as well, it also doesn't help like people's bedside manner and how that goes too. Fuck, I've made that mistake myself, like at certain times, to be honest with you. But the fact of the matter is that like, to the extent that you can, you have to treat these are people on the other side and potential partners of your business, right? Not just for their sake, for your own sake, to be able to vet them out and see whether you like them and like how they think and can they add other strategic value, things like that. It's dating is what it is. Like it's truly dating, and you want to feel that out.
Absolutely. I think you mentioned something like strategic value is very important, that's becoming very undervalued. I would be very strategic on who you're approaching and see how they can bring more value that's more than just money, right? How can they introduce you to their other portfolio companies? How can they, increase your business? What value can they provide that's outside of just monetary value? So that's one approach to do it. And that's the best approach to do it in order to, to have some kind of engaging conversation with that person. If you go in a collaborative effort of saying like, hey, come on, like advise me, what am I doing correctly, and what not, I think that's your best approach of really allowing that investor to dive deep in whatever you're trying to, whatever you're building or whatever startup company that you have. And that enablement then will probably, that VC or that person be like, hey, this is pretty cool, I want to learn more, potentially come in as an investor or lead around and bring in other investors to it, right? Yeah. So that approach of like, coming in from a collaborative perspective is really great. The second thing, if you do get a response from any type of investor and they're asking you questions that, let's say, you did cover in your pitch deck, right? Don't respond in a way of like, hey, it's in this slide, in this deck, reread it, etc. Like I said earlier, we're super busy. We're really screening everything. We're kind of like browsing through it. We're not reading it into a whole bunch of detail. So we'll ask questions like that. Doesn't necessarily mean like, we didn't pay attention or etc. We're just really busy, but we'll ask questions, and we really believe founders should answer them. And it's actually an opportunity. It's a door for you guys to actually start having an engaging conversation. So yeah. If someone does ask questions that was covered in your deck or in your pitch, don't go to the approach saying like, "Are we covered it?" Right? Go ahead and answer the question because they might have a deeper insight to it. So that's another thing. And then lastly, I think we talked about like don't expect them to write a check within 30 days. Don't approach them saying that, hey, we're about to close a round, rush in really quickly. That's definitely not going to work. And then make sure you have your team set in place. I think one thing that we really value is the team dynamic and the culture and the type of leadership that you have. Unless you're freaking, have a previous exit or you're a successful entrepreneur, we really will want to learn more about, your leadership and the team itself. And like I said, like we really don't invest in any companies unless we meet them in person. So usually the steps are, if we are interested, there is, we do like a video conference or phone conference, kind of do our initial screening. And then eventually the company either flies into you or we fly out to them to learn more. And during this time of, with COVID, I think it's a good time to get all the screening components done and share as much information as you can, demo if you can, get that all out of the way, and then try to set yourself up for an in-person meeting. It is a long process to get that money, but it'll be worth it. If you get to the stage of where like, hey, I want to meet you in person, that's usually a promising step.
I mean, I think also building on top of one thing, you said, Raj, which is like, it's very easy as a founder to think very kind of linearly and focusedly in the sense that like you want to go raise money and dollars is what it is. But think about if you have a product already and a given VC or a given investor has a direct connection to another company who could serve as a customer, right? With a complete win-win that could be an influx of capital into your business very fast as well. And a customer, oh yeah, by the way, too. Like there's other ways, which is why, like, at least in my case, I always try to push anybody that I'm working with or otherwise to try to generate without, the need to raise capital to the extent that that's possible, and generate revenue in margin normally to the extent you can in the old school way, let's call it. And then if you need the capital, great, like accelerate your growth, go for it, right? At least have the control at that point. But like this ties in very well with what you're saying, which is like strategic value that could be provided could also be partnerships or customers or service providers, or you name it, that could save you on the revenue side, gains on the revenue side, savings on the cost side, like tons of things that could be, a derivative of raising capital for you as well, in addition to just hard dollars.
Yeah, absolutely. And it's basically, I like I said, approach it from a strategic standpoint, not from a capital perspective. Because if you approach it that way, and let's say the person doesn't write out a check for you, but at least you gain a relationship that, who knows what could come out of it. Be like, hey, I think you should team up with one of my portfolio companies in doing this. And there's other ways of generating revenue for you where you don't necessarily need capital. It's more about partnerships that will enable you to, get a higher user acquisition rate, or maybe a licensing deal, or maybe a freaking buyout, a merger or acquisition that could come out of it too. So you may never know. So the approach should be very collaborative and strategic. And then the other thing is like respect whoever you're approaching, their process. They have their own process. VCs have their own process. Investors have their own process. Respect that process. And as long as you do that, you'll come on top. And then especially during this time, I want to make sure we stick to the coronavirus theme. But I don't think there's ever been a deal closed virtually. So companies like to see their team dynamic, right? So I think like your goal is to try to get a physical meet. So this way you can impress them in person on, showing your culture, your team culture, your team dynamic.
Not right now, to be clear, just to be
not right now. Yeah.
Future.
But in the future, so go through that screening process and work on your way to like, all right, post-COVID, how can I get a physical meet and greet? And then this is the time where you have to shine and really show. And really, it's really important for us to show, to really look at team dynamic and see how they adopt too, right? Like, we want to see how they adopt to certain processes and certain criticisms, and how they evolve in that way. And honestly, also, I'm noticing VCs have been adopting too with, the current state. We're using more, we're recognizing that things can be done a lot more virtually instead of being there in person, right?
Yeah, so either you're going to have to wait for your in-person meeting, or you're going to have to wait for VCs and investors to come around to the fact that they can actually close deals digitally, one or the other, whichever comes first, but neither of those is right now. So what you can be controlling right now in the current world is what Raj is saying, right? Like all those good form things that you could be doing to create awareness and walk people through the process. That's what you can control right now, right?
Yep.
The other thing you control is figuring out, who to target and how your business actually fits and stacks within, quote unquote hierarchy that exists right now, and what the right hook is to be able to position your business in the right way. Except that's what you can control. That's it. And innovate. Yeah. Awesome, man. Well, this is good stuff. Next time around, we'll get some questions. If anybody has questions or topics you want us to cover, we'll probably shoot to do this again sometime soon. Happy to hit on any questions. This is kind of a dynamic world anyway right now, though. So, we'll probably have some pretty good updates next time anyway, regardless. Something that sounds probably like a fraction of what we're talking about right now, because every day it seems like the world is shifting a little bit. But this was awesome. Thanks everyone for joining. Raj, good stuff, man. Fun time.
Fun time, yeah. Can't wait till we meet in person after this.
Oh yeah, that.
Even though you're only a few miles away, it's very interesting. Hopefully the next time we do this, we're in person and doing it live, and
that would be
we
awesome.
probably get more people involved. And yeah, let Athan know. Let us know if you guys want to talk to any specific CEOs or VCs, or we have some really cool ideas, especially Athan on how it could benefit you guys as an entrepreneur, as a growing CEO, and more insight regarding to that. So
good stuff. All right, awesome guys.
All right.
Good rest of the day.
Bye everyone.
I guess.